Good morning and welcome to Lutz's presentation, The Financial Access Checklist, Protecting What Matters Most. My name is Mark Duren, business consultant and former managing shareholder of the firm. Presenting with me today are Erin Baas and Justin Vossen. Erin and Justin, please introduce yourself.
I'm Erin Baas. I'm a director in our client advisory services. And one of my main focuses is outsourced accounting in with high net worth families.
My name is Justin Vossen. I'm a principal at Lutz Financial, which is the registered investment advisor division of Lutz. And I work with high net worth families on their wealth planning, as well as we do some corporate 401ks as well.
Perfect. Thank you both. We appreciate you guys providing your expertise today. Today's agenda includes the following: why a financial access checklist matters, what to gather and track, key conversations to have now, and how assets transfer at death. I wanted to provide a little bit of context on this topic. Over the years, as our Lutz team has pushed to the second generation, our senior leadership has aged, and so have our clients. As a key advisor for many of our clients, we've been involved in messy estate situations due to unexpected events, poor planning, or a lack of planning. From my own experience with my dad passing recently, I thought our family had everything in good order. I quickly found out we didn't. My mother is now 94, and her and dad kept good records. They planned for their own funerals and put together wills and trust. I was provided access to their safe deposit box and thought I had control over all the bank accounts. Dad even resigned as trustee of his own trust and appointed me as a successor trustee for both of their revocable trusts. Unfortunately, Dad's passing came unexpectedly, even though he was having health issues. As I mentioned, we thought we were in good shape, but in reality, many items, most of which were not financial, were not addressed. The digital world we live in today created many challenges with the growing level of security from bank accounts to credit cards, cell phones, utility companies, and even cable providers. Other challenges we faced along the way. A few items, for instance, their car. It was not titled appropriately with no durable power of attorney executed. And in fact, I had to take my mother to the DMV in a wheelchair with a original death certificate in order to get title changed. Mom was not provided with spousal rights for cell phones and for cable. Mom was not listed on many credit cards or utility bills, creating frustration due to lack of passwords and no ability to gain access to the accounts. We didn't update signers for bank accounts to include mom and myself as a successor trustee, and we didn't have control over auto payments coming out of dad's account. And once he passed, the account was frozen, so many bills weren't paid. The lack of control over passwords was really a big problem for us. We were fortunate because my mom's very sharp and has a great memory. In fact, I call her today to ask her questions that she'll remember that I don't. So we were lucky in that regard, but there were some that we didn't. So after battling through that, actually taking mom to personal visits to vendors at that time, age of 92, providing death certificates to many people and all the other information, we finally got control. So from my personal experience, as I came back to the office, I know we had put many things together for our customers, clients, but I felt we probably should formalize that. So working with Justin's group at Lutz Financial, working with our firm's estate and trust division, then also with Erin in our family office, we created checklists and other guidance for family planning. So that's really kind of the emphasis for why we're doing this today. Throughout the seminar, feel free to, in the chat, if you have questions, go ahead and enter those. We'll be monitoring those and we'll address those as they come up and maybe during a couple breaks between agenda items. So for now, I'll turn it over to Erin to talk about why we create a checklist.
Okay, so if you're on this call, you're probably like most households in America, most of our clients, where there's one spouse or one partner that handles the majority, if not all, of the financial aspects of your life. Sitting here today, ask yourself, if your spouse or partner were not here today, would you be able to carry on the day-to-day financial aspects of your life? Do you know where all your bank accounts are? Do you know insurance policies where things are kept, digital accounts and passwords, bill pays. Could you pay bills if that person was gone? Unfortunately, as Mark's personal story, and then we just see with our clients, the answer to that oftentimes, and unfortunately most of the times, is no. So this spreadsheet and this checklist that we helped create is a great place to start. A lot of you are probably thinking, I'm young, I got plenty of time to do this, or I don't have aging parents yet. But in our personal experience, unfortunately, when a life-changing event occurs, a lot of people are caught off guard. So this checklist that we created, it's a great place to start. An unexpected event already is a very emotional, stressful time. So, you add on the emotional and the hardships of trying to track all this stuff down, and it's a lot to bear during these times. So it removes the guesswork from spouses and family members. If you have things already done ahead of time, there's no, oh, did, grandma still have this policy, or dad, I thought we had this account. Oh no, dad closed that 2 years ago. So it removes a lot of that guesswork for your family and your spouse. And then it helps others step in without creating more work. So the work that you've already done ahead of time pays off for them when an event occurs. And a lot of the stories and things we'll talk about today, have to do with the death of a spouse or a parent. This could also, any life-changing event. So a divorce, we a lot of times see this in a divorce where one spouse, took care of everything, and then suddenly the other person finds themselves, alone, with all these responsibilities that they have no idea what to do. So kind of what it covers, the checklist, trusted advisors. Who is going to be your first person that you contact when something happens? So this is most likely going to be, accountants, financial advisors, those types of people, attorneys, financial and legal documents. Where is this stuff kept? Do we have paper copies of this? Is this stuff digital? Is it in a lockbox? Where is the lockbox kept? Where's the key, the number? All of that stuff that, you maybe think is easy, but it's sometimes a trail to locate this stuff. Daily obligations, so utility bills, mortgage, is that stuff on auto pay? What credit cards do we have? Do I have to log into a bank account to pay? So all that stuff, unfortunately, bills don't stop when an unexpected event occurs. Digital accounts and passwords, what does our online world look like? Do we log in? Do we have subscriptions that we have to maintain? That with digital accounts, where are our passwords kept? Do we use a password keeper? All of that stuff that maybe one person thinks about, it's easy, but you're stuck without that person, and all these questions come up. And finally, end of life wishes. Do we have funeral, cremation, burial plots? I sitting here right now, I can tell you my mom I know has a burial plot, but unfortunately I couldn't tell you where that's at. So even, things like that, and things change, maybe 20 years ago, mom's, wish was to have a funeral, and maybe now it's not. So, covering these things and keeping this as a fluid document is huge.
And Erin, I would say in our experience, working with a lot of families on the financial advisory side, we know who the attorney is, who the insurance person is, who the accountant is, who all those are. So if you have somebody you trust as kind of the quarterback of all this for yourself or your family, whether it's the attorney, whether that's the accountant, whether that's a financial advisor, generally somebody is very comfortable with some of those people if they've been long-term relationships, and having just one of those that somebody can know, hey, call Bill or call Erin, and they're going to be able to take care of those other calls to make to kind of coordinate those into life, or change the situation divorce wise. I think because there's a lot of people, and it's not a bad thing, that don't want to participate in some of these financial meetings, and we always encourage both spouses and families together even to participate in those things, but we know the reality of it is that that's not always the case.
Yeah, good point, Justin. I know a lot of times we are, the first person that is contacted, and then we help coordinate all of those other professional relationships too. Okay, so the access checklist, and we will be sending the link out afterwards so that everybody has a copy of this. and it is a fillable document. It's meant to be interactive. It's not a one and done. It's a fluid document that you can change when things change. So we recommend, I've sat down with some clients and gone through this. It is pretty detailed and comprehensive. It's about 12 pages. So it can seem very overwhelming. I see the look on their face sometimes when we put this in front of them. But I always recommend maybe, knock this out in a week. Take 2 pages, take 30 minutes, an hour at, each night, and kind of go through this. And then by the end of the week, you have it filled out. And I recommend, don't have the financial, the spouse that handles everything financially, just fill this out and hand it to, the other spouse. Sit down together and go through this, because a lot of times it will bring up other questions. When you're going through the insurance policy section, is it brought up, well, why do we still have coverage on that? Or I didn't know our deductible was this amount. So it is a good refresher on a lot of things too, going through this, but it is very detailed. And again, it's not a one and done document. Don't fill it out, throw it in the lockbox and then never look at it again. We recommend looking through it at least once a year. And when you're sitting down with these advisors too, at your, annual meetings, like Justin said, both spouses should go, not just one. Stay. It's a day out of the year for you. Just stay so you're, up to date on whatever's going on. And then this document you could print this out if you wanted to and store it somewhere safe in a lockbox, a safe deposit box. Or you could store it digitally and just make sure that it's in a protected folder or other document stored somewhere. But again, we will send this out, and it's meant to be fluid and updated how often that you need to.
It doesn't have to be perfect. I would say something is better than nothing. If you take this exercise and do this, having it all in one place, because from experience, it's the fear of the unknown, whether it's a surviving spouse or in Mark's case, he's got his mom still around, but at the same time, as he's been trustee, he's learning things that he didn't know about. And to have these things all in one place and listed, it at least eliminates some of the fear of the unknown of what they have another membership here, or they have another account. I know they talked to some insurance guy or somebody like that at some point. It just eliminates that fear of missing something. If you have something at least down on paper, like I said, it doesn't have to be perfect and things change, but something's better than nothing.
And I would really recommend for your, aging parents to sit down, and whoever that person is, if it's, the entire family or the person who's going to take over those responsibilities, to sit down and go through this, because I had a client that I got very involved with, and she was a widow, and she really didn't have any close family. And after she passed, I was digging through her drawers, found a safe deposit box, drove to 4 or 5 different banks to try to figure out if it was at that bank. We had no idea which bank it related to. Fortunately, she didn't have a lot in the safe deposit box, but again, just trying to clean up her estate and help with everything. It was a very difficult process to get through. So sitting down with them, and I agree 100% with Erin, it'll bring up other things that you didn't think about. Maybe there's a financial commitment on a donation. Maybe there's, they have some money set somewhere else, or maybe they made a loan to somebody that nobody knows about. Those kind of things, when you go through this whole process, I think would really help a ton. And also for anybody, they probably have their number one. And what I mean by that, we look up here: accountant, lawyer, financial advisor, insurance agent, banker. They're probably close to somebody, closer maybe to that person than somebody else. And so maybe, you got to star the person that you should be calling first. And we'll talk a little bit more about that too. So.
Okay, so speaking of our trusted advisors, so who are you going to reach out to first? Obviously, we have our accountant that we talked about, kind of a lot of times is the quarterback and knows and has relationships with the other trusted advisors. But find out, from your accountant, what does your tax situation look like now? How did your filing status change? Planning for the future, are things going to change? Is there anything with the state taxes? And all the stuff like that the accountant's going to be able to help you walk through and kind of untangle. Your attorney, your power of attorney, executor and trustee roles, who is listed, and make sure that person knows that. And a lot of times these can change. Maybe someone you listed 5 years ago, that relationship has changed and you haven't addressed that. And now you need to. So just make sure you're looking at that stuff. And I know Justin has some stories too about under financial advisor, the notification of death and beneficiaries.
Yeah, when you notify any investment, Charles Schwab or somebody, a custodian, that there's been a death, they're going to restrict accounts until they receive further notification, whether that be from a judge that approving the will and the letters of testamentary, or they're going to require a death certificate to move forward with anything. So you're going to want to make sure that, there's access to funds to get between from here to there in the meantime. So you want some joint accounts and some things like that that can be immediately acted upon, and maybe accounts in the other person's name, just to make sure that when those things get restricted, that you still don't have to pay some bills and complicate things even further. But know that when you notify them of death, that they're going to unfortunately restrict those accounts, which sometimes is a pain for a lot of people.
Justin, putting things in like a personal credit card and both spouses' names and things like that, do you recommend that? I mean, building credit and that type of thing for, an unexpected event?
For just like the surviving spouse?
Correct.
Yeah, I mean, I think the big thing is I would have some assets in each person's name or each person's trust, something that's readily accessible. Don't it all be in one person's name, and joints with rights of survivorship. All you have to do is show a death certificate to the bank, and that survivor, if they're on the account and they're sitting right there, it's obviously their account right there. So that doesn't get restricted. It's when you have it in one person's trust or one person's name only that it becomes a little problematic. So you just want to make sure there's some assets titled correctly, and working with estate attorneys and advisors to make sure that's right.
And that situation did happen when my dad passed, because it was in his revocable trust. And when I thought I had full control as the successor trustee, and then I went in and they're like, no, you don't, the account's frozen. And that's where all the auto pays were coming out of. So very frustrating process, because at that time, I just didn't really understand what limitations I had.
Yeah.
So.
And you want to title some things for tax purposes in people's names too, usually. And but you just want to coordinate that. And we'll talk a little more about titling here in a little bit.
And then on the beneficiaries too, just make sure that those are up to date. I had a friend who went through a divorce, didn't realize she had a small insurance policy. A couple years later, realized that her ex-husband was still one of the beneficiaries. So just make sure you're looking at that stuff too when there is a change of event or maybe a marriage, things like that. Just make sure that that's stuff's being updated, and that when you have this checklist, you should have a good idea of what policies you have.
We run into one ex-spouse a year on an old 401k for a client that will be still listing that ex-spouse as the beneficiary. So tie it up, I guess.
Yeah.
My word.
And your insurance agent, you have all of your insurance with one agency, or do you have multiple different companies? What type of insurance do you have? Life, are there work policies maybe that, work has life insurance policies, property, casualty. When do these renew? Are they auto renew? What's covered? All of that stuff is pretty important to know about. And then obviously your bankers and creditors, what checking accounts, maybe money market, savings, loans. Do we have a home equity loan? Is that stuff, is our taxes and insurance, are they escrowed, or do I need to make my property tax insurance payment? Credit cards, are those set up on auto pay? Who do we have credit cards with? So all of that stuff will be detailed in that spreadsheet, and it should be easily identifiable.
Keep in mind on the credit cards too, because so many of us now have just, your cell phone bill, whatever may go to that credit card. And then all of a sudden you decide to cancel that credit card, and you're not aware that was attached, or you did some things like that. Next thing you know, you're in default on payments and you have service issues. We ran into quite a bit of that. And there was just things I didn't think about because I thought everything was going to flow appropriately. And then all of a sudden when that credit card was closed down, we had all sorts of problems. So.
Yeah, and again, that's a perfect example of, revisit this, at least, once a year, if not more often. Some people like to look at it quarterly as things change, because it just kind of depends on your situation and what you have going on. But definitely keep this document up to date and current. What to keep track of. So we talked about who to contact, and now we're going to talk about what. The insurance, so all of your policies that you have, are they electronic? Do you have paper copies, and where are these kept? Do you have insurance cards? What coverage do you have? What are your deductibles on all of that stuff, and what kind of policies do you have? financial. So your checking, savings, CDs, the safe deposit box. Do you know where the key is? Do you know what bank it's at? Do you know what the number is? Whose name is on the safe deposit box? What's in it even? Stuff as simple as that. And then, the credit and debit cards, we talked a little bit about that. Do you have main credit card, but then maybe you have credit cards at stores at, Gap or Target, what all cards do you have? And then the retirement accounts, do you have old retirement accounts, your current retirement accounts? Who are you getting those statements? Can you log in? What are the login information for that? And then obviously just investment accounts too. So brokerage accounts, who has access to those? What's included in those? Where are those at? So all of that stuff, keep track of probably, digitally, and then to keep that safe and use those, password keepers and stuff like that.
So Erin, one thing I'd say about that is if we would have done a little bit more of this planning, because to me, this helps you plan. My mom and dad had a long-term care in both of their names policy. And they were getting some help at the home when they got older, but we put that all on mom and we didn't turn anything in on dad's. And then when dad passed, we didn't pull any of the benefit. He lost the benefit. And in reality, with some of the things that the nurses were doing, dad was covered or should have been covered. We didn't really think through that well enough. And so his policy just lapsed and didn't get any benefit. And then finally, we're going to run out of mom. So it would have been something that just from a planning standpoint to make sure you're thinking through those things, how you're using money. And Justin, can get involved with that. But if they have IRAs, should you use IRAs first rather than passing those on to the kids? And so a lot of things come up, I think, as you go through this checklist that make you think about what should our steps be.
Yeah.
Absolutely. And two, there's these kind of digital or assets that, aren't tangible, but we've run into a lot of situations where people have maybe collections, art collections, coin collections, jewelry. We had one where a family had a heirloom ring and nobody knew where that was. And they were blaming each other of, well, I thought you had this, or I thought she gave this to you. Where is it? So it's things like that, if you have any gold, silver, all of those kind of tangible assets too, and where they're kept. Are they kept at a safe box in home? Are they in the bank? It's that stuff too, to keep track of and make sure you're updating where that stuff is and what all you own.
And if you want to do your family a favor, consolidate your life to 2 credit cards at the most. Don't have 7, 8, 9, 10. Just because a lot of bills go off of those different ones. And when people are trying to piece things together, there's nothing more annoying than realizing you have something out there that, either they're making a claim on the estate or you didn't know about too. And that's part of pulling credit reports we'll talk about later too. So.
There's target points though.
There's points on all credit cards. You just got to pick pick your favorite, right? As we've talked about the accounts, and Erin walked through all the different advisors and accounts and financial sides of things that are with the list, but there's also the digital life. Things have changed in the last 20 years. And you definitely want to have the spouse or the survivors be able to access different things in your digital world. And what I'm talking about with that is apps, your files, your pictures, your documents, your lists. I'd be lost. My wife keeps a track of everybody's Christmas card address and everything like that on a spreadsheet. I wouldn't know where to go with that. And that'd be important to me if something were to happen to her. But, all those digital things that you keep and you have are huge, just because otherwise you're going to put people on a scavenger hunt. And I go back to when I said nothing's more unsettling and an emotional time for people when they don't know if they've gotten everything, or they're trying to find, as Erin said, an heirloom ring, or, in this count, passwords or photos or whatever that may be. It's a big deal. One of the things I think that's, as things have kind of gravitated towards the Google and the Apple side of it, is that you usually have either a Google ID or an Apple ID, or an iPhone or an Android phone, and things kind of go under those universes, one of the two of them for that matter. I think it's easy when a spouse passes away because generally The other spouse can get into the phone and everything, and they can do emails and do all the other stuff if something were to happen to them. But it's that next of kin or the next person who's the executor that's going to have the most problems. So you can, under the Apple ID, add a legacy contact access key to your settings and designate somebody that will have access to all of this. They have to produce a death certificate and get authenticated. But if they have this legacy access key and they're the appointed person on that, they can get to those as they would be you if you're not around. So this would be important probably for not the spouse, but for the next person that's going to be helping in this situation. The other side, on the Google side, you can set up an inactive account manager. And this basically contacts this person if their Google account's been inactive for a specified time. For some people, that might be a week because there's a lot going on there, or for some people, it might be a little bit longer. But it will actually reach out to that person and that contact. And then again, same thing, death certificate and verification of relationship and things like that you'll need. But that will allow them to get in again to that Google side of things. So that generally, if you can get into one of the two of those, you can get to the emails, the pictures, the documents, the notes, all those fun things. And I would say the apps drives me crazy. I think my wife had a subscription to Paramount and I had a subscription to Paramount at one time. Mine was under my Apple ID. Hers was just direct with Paramount. So, you don't know these things until you get it consolidated, and having those apps and be able to know what to cancel and what other things to do when that happens is a big deal too. So now Ellie's going to do a polling question to make sure everybody's paying attention, one, and then otherwise to get your CE credit or CPE credit.
Anybody that is taking this for CPE, please complete that question. Would hope you're still listening. Yes. One of the polling questions, or one of the questions that we had was, will the materials be available? And yes, they will be emailed to you, all the materials related to this today, including the checklist and the slides and everything else. So look for that. As I mentioned earlier, with my parents, they seem to have a lot of their financial steps in order. My dad was a CPA, and my dad actually ran a trust department in Columbus, Nebraska. So he was aware of all that type of thing. So we were in really good shape on that side. The difficult part was, on the non-financial side, and then also the difficult conversations we have with older parents. Ours in particular was my dad driving. We had to limit his driving, and then eventually we moved them out of their home to a assisted living facility here in Omaha. So difficult conversations that have to be held, but they need to be held so that things are accomplished. So Justin's going to talk a little bit about proactive conversations and some other things about who should be contacted along the way.
Yeah, and this isn't in the checklist per se, but we think that these are some things that you should do as you're going through these checklists. Just like Erin and Mark were saying earlier, is these prompt conversations, these are things that we want to make sure you still kind of keep in the back of your mind. And, if somebody does pass away, and this is going to be a lot of that, less on the divorce side and more on the, estate and transition time. But one of the things we always say is to contact Social Security. Now, the funeral home generally does this for people, especially for the surviving spouse. But probably 10 to 20% of the time, something gets missed along the way. I'm not saying it's our government's problem or the funeral home's problem, but somewhere in the middle. But So, keep on top of that and make sure those benefits and you get what you need, and especially if there's minor children benefits or, spousal benefits that would increase upon the one's passing. The other thing that I think is a huge deal right now, given the fraud and kind of what we see, is probably one of the biggest frauds committed right now is somebody opening up a credit card or some line of credit and draining it under the person's name and they don't know about it. So you can call the credit bureaus, Equifax, Experian, TransUnion. You can get all their 800 numbers out there, but you want to call them and have their credit report file marked as deceased. And so you just have to provide a death certificate and maybe some sort of letters of testamentary or proof of executor or something. But do that just as a safeguard that nothing gets opened, because Lord knows you want to have a year go by and then there's some claim against the estate or this person's estate because there was some credit event that happened that nobody knew about. Also, want to contact the current or former employer. Sometimes there's life benefits, sometimes there's unpaid sick time. There may be a pension beneficiary, COBRA insurance, whatever that may be. Maybe it's just physical belongings that they left at work that you want to pick up, and there's probably maybe some things that are of either value and or sentimental value. So contacting them to let them know they pass is not a bad idea to do it as well. And then memberships. Gymnasiums, country clubs, AAA. We talked about apps, subscriptions to magazines, all those different things that you don't really think about. You want to just nip in the bud as fast as you can. The other thing that we want to probably get into in these next couple slides is when you're doing your estate planning and you're putting this all together and you're finding a way to transition it to folks, is having conversations above and beyond just getting the estate planning and the documents done. I can't tell you, you can have the best plan in the world and spend thousands of dollars on the perfect estate plan to mitigate taxes or do whatever you want to have accomplished. But if you don't have conversations with the people that are either going to be executing that estate plan or the people that are inheriting or the people that are transitioning your items and your goods in your life, if you don't have those conversations and they're surprised by things, I promise you there's enough that's going to be surprising to them when you pass away. You don't want to layer this on top of it.
That's a very good point. And I think that's back to the checklist. A lot of times everybody's pretty private. And I know, like with my parents, they didn't share their net worth and all those type of things because it was their money and they were planning to do with it what they wanted. And so when we finally kind of got to the end, then we started opening up those conversations a little bit more. But I think if we would have been doing that checklist along the way, that would have helped a ton to kind of get that conversation going, to soften them a little bit so that they could say, okay, I can share this information.
Sure. And I would say my recommendation with folks doing this estate planning is don't think about it as a 40-year decision where you're giving assets, who the guardians are, who are going to be your executors. You can always change this. So think of it as, okay, if something happens to me in the next 5 years, what do I want to have happen? And who's going to take care of things? Guardians specifically. I had guardians for my kids when they were young that they would be shipped off to Columbus, Nebraska, which is where we wanted them to go with my sister-in-law, and it would have been great for them when they were 5. But when they got to 15 and had their own lives and their own social network in Omaha and things like that, we had the conversation with my parents to say, hey, if something happens to us in the next few years, would you move up here and take care of them until they got out of high school instead of having to move them somewhere differently? So that's a 5-year conversation that was different from when they were young to when they're in high school from a guardian perspective. So you gotta examine the willingness of those guardians too. If I'd have surprised my elderly parents that they had the kids when they were in high school, they probably would have had a heart attack on the spot. But you want to have those conversations so people know and people know intent, and then you outfit them with enough assets to take care of them, and you outfit them with enough guidance that they can take care of your kids for you.
Justin, do you recommend somebody to kind of write down? I mean, we know we have checklists, we have people we want to contact, but kind of their wishes, especially in a guardian situation, because chances are there's probably some life insurance involved and this type of things. And I mean, if there's features that, okay, I want them to go to private school or I don't, or whatever the case may be, just to give guidance.
I think that's great. I would say we've had some issues where people have had like a laundry list of assets or something that they did 25 years ago and never updated it or never, and then we're going back and looking for things and people get told things along the way and it causes some confusion.
Okay.
As long as you're willing to update those things, I absolutely think it's a good idea. So, executors and trustees, you want to make sure these people have the capacity and the clarity and can take care of the responsibility. Just as Mark said, it's a lot. You're going to be dealing with a lot of financial institutions, a lot of DMV, other institutions, the treasurer, all those different things. So you want to make sure somebody has the capacity and the willingness to do that if they're your personal rep, your trustee, your executor. And I would say don't overcomplicate those things either. If you have 3 kids, some people think it's got to be equal, and you have 3 personal representatives and 3 executors and 3 trustees, makes it a pain. And usually one or 2 of those don't live in the same town, and you have to get 3 signatures and all this other stuff. Find the one who's going to be able to bear the burden and get the responsibility and go with that.
So a story for me when I mentioned that the car was not titled appropriately. I had to take my mother to the DMV down here on 90th and Dodge, or right there at 84th and Dodge, I guess. And as we sat through the whole line, then I realized there was a wheelchair line after 45 minutes, which we could have went right to. Got up to the counter and I had a copy of the death certificate. They needed an original. And so I had to slide my mother off to the side in the waiting area, drove to my office about 100 miles an hour and back because I had it at the office. I didn't have it with me. So just things like that. The more you can get accomplished ahead of time is just so much better for everyone.
The funeral home will give you multiple originals. So ask for at least 10 of them. I promise you'll need them.
Yeah.
So do that when you do go through that exercise. Other things that I just in my experience in 25 years of doing this, having set expectations with children and family are a huge conversation to have before anything happens. You don't want the spouse who's going through an emotional time to have to explain things, especially if they're not comfortable conversations, to the heirs or the children. I would say a lot of these families now are blended families. So the kids might not be, the survivors' kids, and having clear expectations of what dad or mom was going to leave them or not leave them upon that first passing, because we still got to take care of the survivor of the spouses. Having clear conversations ahead of time, I swear to God, will have your relationships be as good as they can be with those surviving children and that spouse, because the last thing you want to have them to do is tell them some unfortunate news about them not inheriting something or not inheriting as much or whatever that may be going forward. So whatever you put down on paper, make sure you have these conversations ahead of time, just because I can promise you it makes those surviving conversations a lot less emotional and troublesome. The last thing I would say is philanthropic wishes. A lot of second generation or heirs are somewhat surprised by philanthropy designations or wishes that occur in the States. I would say having that conversation is a good thing to make sure everybody's not questioning that. If there is a pledge to, let's say you're building a new church and it's a 5-year pledge and 3 years are uncommitted, making sure people know that and having those conversations even with those. I had one client and there's some legal things, or I should say some tax things with IRAs now. You can give to charity up to $108,000 from your IRA as a qualified charitable donation. And if your kids inherit it, they have to take the IRA out and pay tax out over it over these next 10 years with the new inheritance laws. So using the IRA beneficiaries for charity is actually a really tax advantaged way to do it if you're going to give to charity. I had one client that he wanted to give $100,000 to his church upon his passing. I said, and he had his 2 kids as the beneficiaries of his IRA. And I'm like, well, why don't you give the $100,000 out of the IRA today? The church is happier. you can see it actually put into play. Your kids are going to pay less taxes on it. So you probably saved $30,000 that went to the church instead of going to the government. And so, there's some things you can do if you have these philanthropic wishes inside of your estates. Having these conversations might be more tax advantageous to you, and probably a lot more from a standpoint of communicating with that next generation of what they will and will not have.
Okay, our last agenda item that we want to deal with is how assets travel. And you talk to a lot of different people. Should you have a revocable trust? Should you put your accounts in those trusts? Should they be held with rights of survivorship? Should they be transfer on death? There's plenty of items that you could consider. So Justin's going to kind of run through some of these and chat about the benefits of them.
There's no right or wrong way. There's your way. And I promise you, in every situation, there's a different answer. So it's important you talk to your advisors, you talk to your attorneys, and when you're titling things, this is the thing I can't, if you take away one thing, when you spend the money and time and effort to put an estate plan together, and they tell you to title the assets, or here's what we want your beneficiaries to read, or put it into the trust, or put it into joint tenants with rights of survivorship, execute those, because you can have the best estate plan in the world and it can go in the trash if they're not titled correctly upon your passing, and it won't matter. So without getting into too much detail, because like I said, it's personal on everybody's, the rule of contract, any transfer on death, IRA, life insurance contract, pension, retirement accounts, 403Bs, Roth IRAs, anything that has a beneficiary designation, that is the first thing that people are going to look at, and that's how it's going to travel. You can say in your will you're going to give everything to your kids, but if you have your ex-wife as a beneficiary, or your wife, let's just make it easy, as the beneficiary of your 401k, it's going to go to who's listed in the beneficiary first. There can be some contesting to this. If there's potentially somebody feels it's messed up, but that's going to cost a lot of time, a lot of trouble, and a lot of money to kind of have to work through this through the courts to get it changed to the correct intended beneficiary. So all those old 401ks, IRAs, all the things that you have out there, make sure those beneficiaries read what you want them to read and what your estate attorney wants you to have them read. Because like I said, that's going to be the first thing that's looked at, and that will trump any other will or trust you put together to say where that's at.
And those changes are pretty easy as long as you have contact with your advisor or 401k provider or whoever it might be.
It's a DocuSign form you can do in 10 minutes. So it's just, you want to make sure, and while you're going through that checklist, just verify those beneficiaries on each of those accounts when you look at it. The other thing on the rule of law, so that's more of a probate process via the will. So if you have just a will and it says everything goes to my wife, then basically your attorney has to take the will down to the judge. The judge, it goes through probate. They list all the assets that are titled into your name. The judge reads the will, decides if it's valid. There's a couple other things to it, but then basically says, yep, this is good, or yes, this is bad. This takes time, this takes money, this takes effort.
Is that public as well?
It's also a public thing too. And I would say Douglas County is a little different, or Nebraska, because there's a inheritance tax here that makes some things public anyway.
Okay.
So it's more of the hassle factor. I would say that a will is absolutely something you want and something you need, because I'm going to tell you about the alternative, but it's something that you want to make sure if you can add a trust to it, it's probably a good thing too, if there's some significant assets. If you have no will, so everybody out here who's listening, at the very least, you got to go get a will and potentially a trust when you leave this presentation. Because if you don't have one, the state of Nebraska, if we're all here, and other states as well, have a rule that's a legal rule called the rule of intestacy, that they have that decided for you if you do not have a will. And I'll give you a nightmare scenario. Nebraska's rule of intestacy for a spouse with the deceased person has parents and no children, the spouse will receive $100,000, the first $100,000, and then half of the remaining balance. And the other half of the remaining balance, as written by this rule, would go to surviving parents. So my wife would be not happy with
Yeah.
me if my parents got half of the assets that were in my name tomorrow. And again, there's ways that you can probably work through this with the probate judge and with the legal attorney and everybody else, but it's going to be costly. It's going to take a lot of time. But that rule is there if you don't have a will. So if you do run out and go get your will after this because you don't want your surviving parents to get half your assets and your wife or husband to hate you for the rest of your life, you want to probably add a trust as well while you're at it. And basically, a will can direct all the assets not titled in a trust to go into a trust. It's called a testamentary trust. And again, I'm not an attorney, but you can find a lot of really good, capable estate attorneys here in town that can explain it better. But these trusts basically give instructions, trustee appointments, and basically controls the distributions of the assets, how they're titled, where they're warehoused, when people get it. This is not a public thing, so you don't have to file it through a probate process. The trustee gives the powers to reassign those assets that are held in the trust, but they got to be titled that way, or at least have a testamentary will that points them to the trust. And this avoids probate. It's a lot faster. It's a lot cleaner, and it gets the assets basically legacy wise. If you want to control the timing of when people would receive it, if you have minor children, if you have children that aren't ready to inherit those assets, this gives instructions to all those things.
So Justin, a lot of times when I think people hear the word trust, they get a little nervous or a little, maybe a little frightened by the concept of it. There are different types of trust, but one that you would probably recommend right away would be a revocable trust, correct?
Yep. And you still don't have to title all the assets. And again, this comes down to your attorney and what they want. I know there's various attorneys in town that are very, strict on how they want to have everything titled in the trust, but a lot of people say, well, this testamentary trust can capture some of those assets.
Okay.
You risk going through probate.
Yeah.
And people think it's overcomplicating. I think you want to have it because, it's going to, the biggest function of it, I think, is not only to help when you're transitioning the assets, but it also gives instruction when people should receive it. And if you
but a revocable trust is really just you. I mean, when you retitle, it's still you. You have full access. You haven't given anything away. You just have put it into upon your passing, it's in that trust already, and then there's instructions on how those funds should flow.
Yep. And you can still have jointly titled assets that are going to go to the spouse, but there's various reasons that you would use it inside of your revocable trust. But anything that's titled in your name, say a car, and it's not in your revocable trust, technically that'll go through probate because it's just in Mark Duren's name and not Mark's trust name.
Okay.
So the titling and how you execute, and this goes back to what I said at the beginning, how you can have the best estate plan in the world, but if you don't have things titled correctly, you risk executing it poorly and then causing problems on the back end. But that's the biggest thing. Just make sure your estate plan and the wishes that you've spent time and effort and thought in putting into process has the ability to be executed like you want it because it's titled correctly.
Okay. Erin, any final comments from you?
No, I was just going to say, so we've talked about a lot today, and I think the main thing is that checklist. Everything kind of centers around the checklist, and it brings up questions. It brings up things that need to be done. So just, as you're going through that, it's going to spark a lot of, to-do list items and things just to discuss and bring about.
Okay.
And I just say, when we always do these, you're not going to take everything and everything's not going to be perfectly relevant to your personal situation. And we look broadly at this, but we hope that you can take one or two things from here. And like I said, if you don't have that will or trust executed and you've got family and friends and spouses and stuff you want to take care of, go get it done.
Yeah. And ultimately, I believe the upfront work will really help at the very end.
Absolutely.
You don't know when an event's going to happen. You could probably plan forever and you think you're ready for it, but quite frankly, you're not ready for it. So having that plan in place, as we mentioned, it removes stress. It adds a ton of clarity, and it really allows everyone to celebrate the life of whoever passed. And at times, I think the people that get involved in all the details afterwards, I've heard people say this, they didn't really have a chance to grieve. the loss of, a parent, spouse, whatever it might be. So the more you put in place, I just think it's just easier for everybody. So.
Yeah, it's never fun to talk about. These aren't fun topics, but kind of like what we've been saying, guarantee it'll be better to do it now than at the time.
Okay, a little bit about Lutz. I think many probably on this call, are aware of Lutz. Formed in 1980. We have 3 offices in Nebraska now: Omaha, Lincoln, and Grand Island. Of course, we're all Nebraska, so we have Midwest values. We're up to 370 plus employees throughout our network. We build on a team concept, so we're all about trying to design a team that fits whatever your needs might be. That's why we work with Lutz Financial. That's why we work with our family office. That's why we work with our merger and acquisition division. We've really formed ourselves into a business solution firm. So we do a lot of expert accounting, tax, all the things you expect from a CPA firm. But we have a technology division that does consulting and management. We have our wealth management division that Justin's in, and financial planning. We have a talent division that does placement. It also does short-term temporary positions, accounting, finance, administration. We're actually doing a little bit in HR, engineering, and some construction management. I mentioned our merger and acquisition firm. We help businesses sell. We help buyers buy. So we're involved with that. Other services that we have within the CPA firm, we do business valuations. We do estate planning. So if you have business assets and you're thinking about setting up some trust and you're thinking about changing some ownership, we can help with that. We have family office administration. Erin's very involved with that in terms of, high net worth individuals or somebody that needs accounting assistance, whether it's for their business or whether it's for their individual needs, because maybe they've relied on their, company that they own forever to handle all of their accounting and all their bill pay and all those types of things. So we're very active with that. So industry-wise, we're across the board, but really strong in construction, agribusiness, manufacturing, medical, and the hospitality area. So, and then finally, we're in a prime global network for us, which allows us to have a little more national and international presence. So that's a little bit about Lutz. So if you have additional questions, we thank you for your time today. You could please send an email to the firm, to any one of us, or just a general email there. We thank you for attending. We hope this seminar will provide some encouragement to spend some time to get all of your affairs in order. So have a great day.
One of the questions we had was, can you put beneficiary names on a vehicle title? I know you can do it you can do a transfer on death on a house title. I don't believe, and I'm out of tune here or out of turn if I say this wrong. I don't think you can put beneficiaries on a vehicle title. You can title it in the name of a revocable trust. You can title it in the name of the person. I don't think that at least Douglas County has that ability. But like I said,
I think you're correct on that.
I know they do on a home title. You can do a transfer on death to a trust or to another person.
And then we had a lot of questions about sending copies out and replays. And like we mentioned, that stuff will all come out after this is over so that you can rewatch it or have a spouse watch it too.
Just going through some of the questions. Does size of estate matter when setting up a trust? Minimum amount. Again, this is something that I would say is unique to each family and each individual. I don't think the size matters that much. I do think you need to have assets, obviously, to put in there. And then it's just a question of, with portability and some different things, potentially not having a trust, except for the survivor, maybe. It might make some sense if you don't want to go through the time and effort, but having a sit down with an attorney who kind of is very versed in estates, they'll be able to walk you through it. So I wouldn't want to put a number on it because I truly think it's different for everybody.
There's one out there about, do they transfer into a trust at market value?
Well, assets that are transferred into an irrevocable trust, which is very different than a revocable trust, are transferred at market value. That's a hold that we're not even talking about.
Right.
Estate wealth transfer in this presentation. We might have one coming forward at some point, but that's a different thing. But revocable trust, you can just change the title of. an asset and there's no value moving one back and forth. It's when you get to an irrevocable trust that matters more.
And then how do we get a personal asset without a title to pass to a trust?
You think about that question. How do I get a personal assets without it?
Without titling is
You can do a laundry list via the will or something that moves those assets into a trust. So if it's a piece of jewelry, you can, usually you have to
Specifically
have it
list that.
appraised, but you have to list it out
Okay.
as what I would call the laundry list. That you list those things that are very specific, and those can be at your passing go into the trust. But at your passing, it'll be valued and put in there and everything. So I generally, without getting technical, if it's sentimental value, I wouldn't worry about it. Just have a conversation with people. Or I'll give you an example. When my wife's parents passed away, they had a draft and they went through a lot of the personal items, and they basically drew from a hat, and somebody got first pick, and then her sister got next pick, and then her brother got the next pick. And they just kind of did that cycle and went through things. And that seemed to work really well because there's things that are more important to others. And again, if you put it down too early, 20 years prior, you might change your mind 20 years later. And you don't want to have it too specific, but some things like that work. Somebody said you cannot put beneficiary names on Nebraska titles. So the car titles in a adding beneficiaries, you cannot do so. Would you recommend having the attorneys do the inheritance tax form? Mark?
Attorneys have to do that.
Yeah.
CPAs are not allowed to practice in that. So that is definitely an attorney function.
Wonder if you think it's best to put beneficiary names on most financial bank and brokerage account as primary POD beneficiary with a successor beneficiary of a revocable trust. I think the POD and TOD designations, whether it be a revocable trust or to another person or persons, is an excellent way to do it, because that will not travel through probate. If at that TOD, which is transfer on death or payable on death designation with a beneficiary, whether it be trust or individual or individuals, it will not pass through probate. But no, that will also not pass through the will. So if you give it to your son, you don't leave anything for your daughter in that POD, and you give them 50-50 in the will, that POD or payable on death account is going to go straight to your son and not your daughter. So.
Okay, I think that's it for the questions. Again, we thank you.
If anything comes up afterwards, feel free to email in too. And again, we'll be sending everything out.
Thanks, everybody.
Thank you.